The OPEC Plus oil producing nations are going to be meeting on Sunday to consider deeper output cuts. The alliance will weigh the impact of a pending ban on Russia's crude exports and a possible price cap on Russian oil. Guess who's here, guys? To talk about this in studio, no less. Helima Croft, RBC Capital Markets Managing Director, Global Head of Commodity Strategy, also, of course, a CNBC contributor. Nice to see you.
Thank you for having me. Now, I should have been in Vienna for OPEC.
I know. So what's happening here? Why? Tell what's happening here.
I think OPEC decided they did not want any media attention on this Sunday meeting. There's so much uncertainty about what happens on Monday with the EU sanctions kicking off. I don't think they want to be part of the narrative right now. I think we're more likely to see a rollover of their 2 million barrel a day cut that they did in October. I think everybody is waiting to see do Russian barrels come off the market come Monday.
And what do you think happens on Monday?
I mean, what's amazing is the European Union ambassadors are still meeting, trying to determine what's going to be the price for this cap. We still have no agreement, and these sanctions launch at midnight on Monday. And so everyone is saying we're getting close, but Poland is holding out.
I was going to say, isn't it just Poland?
It is Poland. But Poland is, basically saying we're in solidarity with Ukraine and we want a lower price. We can't allow Russia to simply get, current pricing for their barrels. And so the question is, will Poland be brought on board? Is there some fix in terms of further sanctions on Russia that gets Poland across the line? But we have precious little time. And on Monday, it's not just an embargo on Russian crude into Europe. It's a ban on the provision of all Western services.
When did OPEC ever worry about bad PR? In this case, did they get stung when we said they're enabling Putin by cutting?
I mean, I think that there was such a strong reaction in Washington that I don't think they were entirely anticipating. I think at this point now, it's honestly, they don't know what decision actually to make because they don't know how many barrels are off the market. Better to wait and see and then meet in January if you need to make some type of adjustment. But they're dealing with the China story on demand.
Maybe that's it, yeah.
But it really is. You don't know if potentially on Monday, does 1 million barrels stop? Does it 2 million barrels? Because everyone's going to have to read. If you're a shipping company or a trading house, you actually don't know right now whether you're going to have a price cap, whether you have the full sanctions. It's a major policy decision.
If the sanctions roll in, what will that mean? If it's actually, when you said a stoppage on all Western, explain
This is rolling in, regardless of whether there's a price cap or not. So Europe will no longer take any Russian seaborne oil.
Even if it's already on the water?
December 5 is the key start date. So anything basically after December 5 coming in has to stop. Then there's a ban on the provision of services, Western services, to move Russian barrels anywhere in the world.
What does that mean, Western services?
Shipping, insurance. Think about insurance. 95% of the insurance for shipping is essentially done out of Europe and London. And so it's going to be very hard to underwrite these cargoes. Now, the price cap was designed to allow Western service providers to still move Russian barrels as long as it was at a cap. But if there's no cap agreed, all those sanctions kick in. If there's a cap, you can still move the barrels, but it has to be at that price cap or below. But the Russians are saying, we're not going to sell to anybody who abides by the cap.
So if Poland sticks to its guns and says, lower cap or no cap, then they get no cap, and then
and all the sanctions come into effect. Yeah. The full launch of an embargo and what is essentially secondary sanctions, very similar to the type of sanctions on Iran. And so that's why the U.S. Treasury was very concerned about a major market disruption.
So let's say that scenario is what happens. Then the price?
The price will be significantly higher.
I know, but what we're talking about. Give us some ranges here.
If you want to go back to that $100 plus scenario, it is essentially these sanctions kick in and there's no price cap offset. And again, people are very confused about the price cap. It's a confusing concept.
Right.
It's simply to prevent a market disruption by allowing a Greek flag tanker, a European insurance provider to move barrels to Asia.
What happens if they do agree to a price cap? Let's say it's $59, just for argument's sake. And then this happens, but Russia says it won't sell any oil. Then how much oil is missing?
I mean, some people dismiss the Russian threat. But remember, the Russians said, we're not going to sell gas to anybody who doesn't pay in rubles. They carried through with that threat. They have cut off a number of countries on gas. Now, oil is a bigger revenue driver for Russia, But when they say we're not going to sell to anybody who abides by the cap, I think we have to take that seriously.